Hi friends, good morning everyone and welcome back to CAP classes. So today, on the request of many students, I started revising this auditing and assurance subject. So first I am taking RTP, latest RTP May 2021, and in that they have given correct, incorrect statements. As you know, MCQ and this multiple choice questions, this objective type will come for 30% of marks. It is very important to have one, conceptual knowledge, and two, you need to practice a lot of questions. You call it MCQs, you call it correct, incorrect statements. So these kind of things we need to do. So in this lecture, we are going to discuss almost 20 correct incorrect statements along with the logical reasoning. Not only this 20 correct incorrect you will learn, but you will also revise many concepts of Companies Act which is covered in your company audit, like section 139, like section 177, section 143, section 141. You call it appointment of the auditor, you call it rotation of the auditor, you call it audit committees. So many concepts are covered in this video. So this will be highly useful for those students who are writing CA IPCC examinations, CA inter examinations, CA final old syllabus and CA final new syllabus as well. So whatever the exam you are in, whatever the level you are in, and also if you are CMA India and CS executive student also, this lecture is going to be very highly useful for you, because company audit, point number 1 is high weight topic, and point number 2 is now in all the formats this objective type questions are introduced, so you need to be extra careful. And also mind you, to give you a friendly caution, just if you write correct and incorrect, you will not get marks. They will ask you, mention whether the given statement is correct and incorrect with reason. Look here, with reason. This is the phrase used in the exam. That means, in short, you need to write the logical reasoning behind your answer. If you say correct, why it is correct? If you say incorrect, why it is incorrect? So let us not waste time and let us go into question number 1. Okay, shall we start with question number 1? Shall we start with question number 1? Read question number 1. The first auditor of a government company. The first auditor of a government company was appointed by the board in its meeting after 10 days from the date of registration. So what is this question? This question is about appointment of first auditor of a government company. If it is any company other than a government company, who appoints the auditors? Board of directors. If it is the first auditor of a government company, C&AG appoints. Isn't it? So the given statement is wrong, incorrect. And also, what is the time frame? If it is a regular company, it is 30 days. But if it is a government company, it is 60 days for C&AG. And if the C&AG failed to appoint within 60 days, then board of directors can appoint in another 30 days. So what is the question? The first auditor of a government company was appointed by board in its meeting after 10 days from the date of registration. What is the answer? Incorrect. The given statement is incorrect, because according to section 139 subsection 7, the first auditor of a company shall be appointed by, in case of a government company, the first auditor of the company shall be appointed by C&AG within 60 days from the date of registration. If they fail in the next 30 days, board of directors can appoint. Question number 1. Now question number 2. Director's relative can act as auditor of the company. Seriously, beta, there are certain things called disqualifications of the auditor. In the disqualifications of the auditor, what are there? Body corporate is there, employee of the company, officer of the company is there, and then partner or employee of officer employee is there, and then directors relatives are also clearly covered. Section 141 subsection 3 of the Companies Act 2013, a person shall not be eligible for appointment as auditor of a company whose relative is a director or in employment as a director. So either he is a director or he is an employee director or he is key managerial personnel. Then you are not eligible for appointment. So the given statement is incorrect. What is the given statement? The given statement is director's relative can be appointed as auditor of the company. The answer is incorrect. There is a specific prohibition on it. Okay. Question number 3. If an LLP, a limited liability partnership firm, is appointed as an auditor of a company, every partner of the firm shall be authorized to act as an auditor. No, the given statement is incorrect. Why? Listen, the qualification to be company auditor is If he's an individual, he should be a chartered accountant holding certificate of practice. If it is a firm of chartered accountants or LLP, majority of the partners shall be chartered accountants, isn't it? Majority of the partners shall be chartered accountants holding certificate of practice. So imagine there is a firm where 7 partners are there. There is a firm where 7 partners are there. There is one LLP where 7 partners are there. Okay, in that 7 partners, 5 partners are chartered accountants holding COP, and then one company secretary is there, and then one cost accountant is there. Imagine this is the firm. Possible, it is possible. Multi-purpose firms are nowadays possible. So in this, first 5 partners are there, no chartered accountants. They only can sign the audit report. They only can sign the audit report. Remaining 2 persons are not eligible to sign the audit report because they are not chartered accountants holding COP. This applies to firm of chartered accountants or LLP of chartered accountants also. So the given statement is obviously incorrect. This question is 2-3 times repeated in the same RTP. This is RTP 2021 May. That means latest RTP we are discussing. And one more question can be asked from this area. Remember one more rule. To be appointed as auditor of a company, that LLP should be LLP registered in India. Once they asked a question, X LLP, which is an LLP incorporated in Singapore, is appointed as auditor of A Limited in India, ineligible. Because to be appointed as auditor of a company, you can be LLP. LLP can be appointed, but that LLP should be registered in India. Okay, if LLP is registered outside India, that cannot act as auditor of Indian companies. And what is the rule? If partnership firm or LLP is appointed, only chartered accountants holding certificate of practice who are partners in the firm or LLP, they only can sign the audit report. So the given statement is incorrect, isn't it? Next, question number 4. AB and company is an audit firm having partners Mr. A, Mr. B and Mr. A and Mr. B. That's all. Only 2. It should be in the next line, I think. Okay. AB and company is an audit firm having partners A and B. Mr. C, relative of Mr. B, is holding securities having face value of rupees 2 lakhs in XYZ Limited. AB and company is qualified. AB and company is qualified. The question says AB and company is qualified for being appointed as auditor of XYZ Limited. No, the answer is incorrect. Remember the rule. If I am proposed to be the auditor, I cannot hold even a single share. I cannot hold even a single share in that particular company. So if Pavan is proposed to be, Pavan is a qualified chartered accountant holding certificate of practice. If Pavan is supposed or proposed to be appointed as auditor of NTPC Limited, Pavan should not own even a single share in NTPC Limited. But Pavan's relatives can hold shares up to 1 lakh rupee face value. Up to 1 lakh rupee face value, and that too, this exemption of up to 1 lakh rupee face value is there, no? That is given only for this particular company, not to its holding company, subsidiary company, associates, etc. Only in this company, relative can hold up to 1 lakh shares. But here, this relative is holding shares worth 2 lakh rupees face value. So sorry to inform, dear Mr. A and dear Mr. B, you and your firm of CS is not eligible to be appointed. You are disqualified. Your relative is holding 2 lakh rupees worth of shares, so you are disqualified. And the question says AB and company is qualified, so the given statement is incorrect. The given statement is incorrect. So read this. As per the provisions of the Companies Act 2013, a person is disqualified to be appointed as an auditor of company if his relative is holding any security or interest in the company for a face value exceeding 1 lakh. Therefore, A, B and company shall be disqualified. That's all. Question number 5. The auditor of A limited company wanted to refer to the minutes book during the audit, but board of directors refused to show the minutes book to the auditors. Commonly asked question. Can auditor have access to minutes book of shareholders? Can auditor have access to board meetings minutes? Can auditor participate in AGM? Can auditor participate in board meeting? Can auditor participate in audit committee meeting? Can auditor verify minutes book? Can auditor verify cost records? all these questions are asked. Repeatedly asked. Important questions. Read the question once again. Tell me what is your answer. No, sir. You have water, sir. We will sit and wait for your answer, sir. We will not tell answer, sir. Okay. So, having access, unrestricted access to the books of account at reasonable business intervals is one of the statutory rights given by the Companies Act to the auditor. So if I am auditor of X Limited cannot deny access to books of account for auditor. I can go to any branch office, I can go to registered office, I can, verify any thing that comes in books of account. And the word books of account is so huge, it includes all the supporting statements, memoranda records, journals, registers, statutory registers, okay, operating reports, or you call it bills, invoices, vouchers, confirmation. So anything I want to verify, access should be given to me. And this phrase books of account includes minutes books also. So if I want to verify minutes book, dear company, you cannot say no, you cannot have access to minutes book. No, it is my statutory right. So write down in your notes, write down point number 1. Auditor can verify minutes book of shareholders. Members meeting minutes book, auditor can verify. Auditor can verify minutes of board meetings also. Point number 1, general body meeting minutes, auditor can verify. Point number 2, board of directors meeting minutes book, auditor can verify. Any committee of board of directors, like nomination committee, risk management committee, strategic steering committee, remuneration committee. In corporate governance, there are so many committees, you remember. Beta, whatever the committee is there, if there is a meeting of board of directors or a committee of board of directors, if there is any thing discussed in the meeting which is minutized, it is my right to refer to that. Point number 2. Point number 3, right now, auditor can attend any meeting of shareholders. General body meeting we call general meetings, you call it annual general meeting, you call it extraordinary general meeting, you call it statutory general meeting. If it is general meeting, I can go and participate. It is my right. And I have to attend AGM. It is my responsibility also. If I cannot go, I'll send, my partner or any qualified chartered accountant who's employed in my firm. So I'll send some other chartered accountant. But attending AGM is a must. So attending general meetings is both my right and my responsibility also. Okay, but remember one thing, auditor cannot participate in board meetings. If this question is given, students, we get bowled. They'll say, no, auditor can go and participate in board of directors meeting also. Who said? You are writing Companies Act, New Companies Act. Auditor cannot participate in board meetings, but board meeting minutes, auditor can verify. You understand? And one more killer question can be asked here. Auditor wants to verify cost records of the company. Auditor wants to verify cost records of the company, but the finance director said there is another cost auditor already appointed pursuant to the directives of central government. Since there is another professionally qualified cost auditor conducting audit of cost records, the finance director contended that the cost records need not be verified by the company auditor. What is the answer? The contention of finance director is wrong, because I have statutory right to, have access to books of account. No, books of account includes cost records also. You understand? Books of account includes cost records also. So, company auditor's right to verify minutes, company auditor's right to verify board minutes, company auditor's right to verify minutes of committees of board, company auditor's right to visit the general meetings, participate in general meetings, company auditors' right to verify cost records, all are statutory. All these will come under books of account. So you cannot restrict me. Only one restriction is, if I am auditor of the company, I cannot go and sit in board of directors meeting because they might be discussing so many confidential things. But finally, whatever the decisions they make, they will minutize. Once the resolution is passed, company secretary will write it in the minutes now. That minutes book I can verify. That's all. So the given statement is incorrect. Auditor can verify the minutes of both general body meetings and also board meetings. Question number 6. Manner of rotation of auditor will not be applicable to company A, which is having paid up share capital of rupees 15 crores and having public borrowings from nationalized banks of 50 crores because it is a private limited company. Wicket board. Now Chintu will get it out. Sare, rotation of auditors is given in section 139 na sare. Yes. 139 is not applicable to private limited companies. No. Who said? Hello, who said? Rotation of auditors is applicable to private limited companies also. But to apply rotation of auditors to private limited company, it should have a capital of 20 crores or more, or public borrowings from nationalized banks, from banks or public financial institutions. 50 crores or above. If you have borrowings of 50 crores or above, then beta, welcome to section 139. You have to comply with rotation of the auditors. So the given statement is incorrect. Now Chintu will get it out. But sir, I read in a book that for a private limited company, rotation of auditors is not applicable, sir. Beta, this criteria is there, no? Turnover criteria, loans criteria, revenue criteria, sales criteria. This criteria is there in many places. For example, in Caro applicability it is there. For example, in 177 corporate governance audit committee it is there. In rotation of auditors it is there. 138 applicability of internal audit it is there. Correct, sir. When you are telling all this, we are remembering this criteria is there everywhere, sir. In 177, it is not applicable to private limited companies. Corporate governance need not be there for private limited company because it is for listed public limited companies, all listed, and for other than listed public companies. That means unlisted public company criteria is given. But for section 139, for private company also, if you have share capital of 20 crores or if you have borrowings of 50 crores or above from banks and financial institutions, rotation of auditor is applicable to you. That is all. So read this. The given statement is incorrect. Read the second part. First part is provision of law 139. Although company A is private limited company, yet it is having public borrowings of 50 crores. Therefore, it would be governed by the provisions of rotation of the auditor section 139. Question number 7. The auditor should study the memorandum and articles of association to see the validity of his appointment. Hello, wait. If your question is up to this, say if this is deleted, the auditor should study memorandum of association, articles of association. Correct. But they added this phrase, no, now it is incorrect. Why will you verify memorandum of association? To understand the objectives of the company, capital of the company. For that you verify MOA, charter of the company we call. Why will you read articles of association? You need to, being the auditor, you need to read articles of association to understand the organizational structure, internal bylaws, whatever the restrictions placed on the company, restrictions placed on the management, how the company is to be run, all this will be there in articles of association. But if you are auditor, to see whether the appointment of auditor is valid, what will be there in MOA about appointment of auditor? Stupidity it is. But remember, it is your duty as per the Companies Act, if you are appointed as the auditor, it is your duty to verify the validity of appointment. Pavan sir, what is the meaning, Pavan sir? Compliance with 139, 140, 141. If you do not check whether 139, 140, 141 procedures about your appointment, about removal of your predecessor auditor, if you do not evaluate, if you do not verify them, and if you accept the appointment, beta, it is a professional misconduct. ICI will call you to Delhi and slap you. So it is my duty to verify whether my appointment is valid, but that cannot be done through MOA, AOA. You understand? For what I'll verify MOA? Objectives and capital. For what I'll verify AOA? AOA will be verified, Articles of Association will be verified to understand what are the restrictions placed on the company and its management. Bylaws, internal management, how the internal management has to happen. To verify whether my appointment is valid, whether it is done in compliance with 139, 140, 141, what do I need to verify? I need to verify appointment letter and the AGM minutes. The manner in which the previous auditor is removed, whether it is following the procedure as per the company law or not. That is what is given here. That's all. So the given statement is incorrect. Congratulations. Question number 8. Managing Director of EA Limited himself appointed the first auditor of the company. Are you kidding me? First auditor of the company is to be appointed by Board of Directors, not by MD. MD is not Board of Directors. No, MD is bloody one individual. Board of Directors is collective body. So MD cannot appoint first auditor. Board of Directors will appoint first auditor, that too by passing a board resolution. So the appointment is not valid. It is incorrect statement. What is that? Incorrect statement. As per 139(6) of the Companies Act, the first auditor of the company shall be appointed by Board of Directors within 30 days from the date of registration. Therefore, the appointment of first auditor made by MD is violation of Companies Act provisions. Dear MD, you cannot take the authority into your hand. It is the right given to Board of Directors. Question number 9. A chartered accountant holding securities of S Limited having face value of 950 is qualified for an appointment. Are you kidding me? I told you already, even if you hold one share, a person is disqualified to be appointed as auditor of a company if he holds any underline, any shares, any securities giving voting rights, or any interest in the company. So this guy is disqualified. The given statement is incorrect. The given statement is incorrect. Okay, if you have shares, you cannot be appointed as auditor of that company. Question number 10. Mr. N, a member of Institute of Company Secretaries of India, is qualified to be appointed as auditor of XYZ Limited. These are comedy bits, okay? So sometimes in a serious movie also, Bruce Lee movie or Jackie Chan, super duper action movie also. Jackie Chan movie, he only does the whole comedy. But any serious movie you take, or like Bahubali, some comedy characters will be there, no? So this is a comedy character bit. At least bit should have some sense, no? A member of ICSI, how can he be appointed as auditor of company? I am chartered accountant, I can do surgery, yeah? Can I cut one part of any person? No. How can I? Same. So, if he is a member of Institute of Chartered Accountants of India, sorry bro, we respect you, you are our sister concern. You are a professional, but you are not eligible to be appointed as auditor of company. Sorry, as per section 141 of the Companies Act, only a chartered accountant is eligible to be appointed. Question number 11. Put a star mark. Important, very, very important. Straight this can come in your exam, I am telling you. There are 3 bits which I like in the whole 20 bits. These 3 bits are very important. This is one bit, and then cost audit applicability, export incentives, and not export incentives. Revenue in foreign currency is there. That is also very important. Revenue in foreign currency. And this is also important. This question is repeated twice. In the same RTP, they have given this question twice. Read the question. The board of directors of ABC Limited, a listed company at BSE, is required to fill casual vacancy of an auditor only after taking into account the recommendations of audit committee. So tell me one thing, if it is a listed company, is it necessary to have Audit committee? The answer is yes, 100% yes. Section 177. All listed companies must have audit committee, no doubt about it. Point number 2. Whenever you have an audit committee, you should consult the audit committee, take the recommendations and inputs of the audit committee to appoint your company auditor. This rule is applicable even if it is a casual vacancy. In fact, ICA is doing a favor to you by framing the question like this. In the exam, they will not do, 360 or not 360, 180 days. 180 days, ICA will love you. So they'll give plain questions in the classroom. Or maybe 170 days. Remaining that 16 days of exams, no. It is something like you and I are brothers, we love each other. But not when we are playing cards. When we are playing cards, your money is your money, my money is my money. Other than that, we are friends. So ICA has done a favor by giving this question like this. To twist it in the exam, what they do, as per the Companies Act, the board of directors of a listed company have to consult audit committee and to take the recommendations of audit committee for appointing a company auditor. Whether this provision applies to casual vacancy also, or they add more screenplay, story, drama, spice, pepper, salt, everything they add by saying that Mr. A is the auditor of XYZ Limited. Mr. A is a chartered accountant in practice. He is appointed as auditor of the company in consultation with the audit committee, and after considering the recommendations of audit committee by the board of directors. He is appointed by members. But unfortunately, Mr. A died in the accident. Oh my God. Now board of directors need to fill the casual vacancy. Now board of directors contended that to fill the casual vacancy, recommendations of audit committee need not be considered. Comment. Now you have to tell, dear ICA, how many twists you put into this question. One thing is clear. If audit committee is there, the recommendations of audit committee shall be considered in appointing the auditor in all the situations. Whether it is casual vacancy, whether he is first auditor, second auditor, third auditor, subsequent auditor, or whether he is a casual vacancy auditor, whatever it is, you need to consult audit committee recommendations. So, what is the question? The question is, the board of directors are required, the board of director is required to fill the casual vacancy after considering recommendations of audit committee. This is the question. The answer is correct. 11th question. Which question it is? 11th question. Till now 10 questions we read. No, all the answers are incorrect. In the whole RTP, there is only one correct question, and that is this question. Sir, in RTP there are 2 questions where answer is correct, sir. Array, second question is also copy of first question only. This question only. Okay, so we'll go to question number 2. Put a star mark. This is also important question. Bharatiya Gas Limited, a government company, C&AG of India shall, in respect of a financial year, appoint an auditor duly qualified to be appointed as an auditor of the company. How much they complicate, I tell you, Amma. 1, 2, 3, 4, 5 lines question is there. And there are no full stops. Only people like Swami Vivekananda can understand this English. Bharatiya Gas Limited, comma. A government company, comma. The C&AG of India shall, comma. In respect of a financial year, comma. Appoint an auditor duly qualified to be appointed as an auditor of companies under this act, comma. Within a period of 180 days from the end of the financial year, comma, who shall hold office till the end of the next financial year, full stop. By this time, a student will gasp for breath and fall, and he will die on the floor of the exam hall. Basically, what they are asking, to appoint the auditor of a government company, C&AG appoints the auditor within a period of 180 days. from the end of the financial year. So now student will think 180 days. Correct. Ray, 180 days is correct. But they gave 180 days from the end of the financial year. But the provision is 180 days from the beginning of the financial year, no? Oh my God. So 180 days from the beginning of financial year, auditor will be appointed. But here they said 180 days from the end of the financial year. So this answer is incorrect. And who shall hold the office till the end of next financial year? No. This auditor will hold office till the end of next AGM. So there are two mistakes in this question. The given statement is incorrect because the auditor of a government company shall be appointed by C&AG within 180 days from the beginning of the financial year, and he holds the office till the end of not financial year, till the end of AGM. That's all. Section 139 subsection 5. Ta-da. Question number 13. CAK has resigned as auditor after 2 months of his appointment in NML Limited. Super, congratulations. He needs to file ADT 3 with the registrar within 60 days from the date of resignation. Now student will think ADT 1, no, ADT 2, ADT 3, resignation correct. Ray, wait. It is not about ADT 3. ADT 3 is correct format. When you resign, you have to file ADT 3. That is correct. But is it 60 days? Fine, 30 days. Correct, sir. 30 days I'll write. Hello. Wait, there is one more wrong also. To file ADT 3 with the registrar. Is it only with the registrar? No, with the company and registrar. There are 3 answers to a question. One is the correct answer, one is the wrong answer, one is ICAI answer. In correct answer also there is something called ICAI answer. So in the answer you have to write the auditor after his resignation needs to file ADT 3 within 30 days to the company and the registrar. That is the answer. Oh my God, with the company and the registrar is the answer. Mr. K resigned. So he filed after 60 days, within 60 days. No, you have to file within 30 days beta. He has filed only with the registrar. That is another mistake. He has to file to company and registrar. Oh my God. Pavan sir, we'll go to question number 14. Pavan sir. Okay. The board of directors of ABC Limited, a listed company at Bombay Stock Exchange, is required to fill the casual vacancy of auditor only after taking into account the recommendations of audit committee. Copy paste of question number 11. The given statement is correct. Question number 15 is also repetition. Any partner of LLP who is appointed as auditor of a company can sign the audit report. No, we have seen this in the second or third question itself. Only chartered accountant who is partner in that LLP can sign the audit report. And remember, even employee CA cannot sign. In one LLP, there is one chartered accountant who is employee. Employee CA also cannot sign. Partner other than CA also cannot sign. So to sign the audit report, 1, you should be a qualified chartered accountant holding COP. 2, you should be partner of the company. If you are not partner of the firm, if you are not partner of the audit firm, you cannot sign. This is a very famous question, tested so many times. Question number 16, audit committee is to be constituted by every public company to ensure better standards of corporate governance. Use your common sense, okay? Corporate governance is the concern where public money is involved. Reliance Industries, 1 million shareholders are there. Corporate governance is a concern, isn't it? Imagine there is one small bakery roadside, small tea stall roadside. They incorporated a company, XYZ Tea Stall Private Limited, Chai and Kadi and Pakodi Private Limited. Some private limited they started, educated, study fellow. Possible, no? Okay, tomorrow if For fun I'm telling, but maybe it could happen also. Pavan Kumar Organic Vegetables Private Limited. Sir, will you do that? If I surrender my COP, then I'll do that. If I'm having my COP, I cannot do any other business. If I'm not in practice, then I'll start. For farming, there is a, there is a permission given by ICA. ICA said chartered accountants in practice can engage in farming, agriculture. Okay, but you cannot start a company in your name. Imagine not Pavan Kumar. Okay, roadside Tom, Dick and Harry Vegetable Private Limited. His own money. He is only doing all the activities. Why do you need to have corporate governance? Seriously. So the corporate governance is a concern for public companies. But that too, not every public company. It is only for listed public companies, all listed public companies, plus if the company is unlisted company, then there is a criteria. What criteria? 10 crores, 100 crores, and then 50 crores. Okay, so here share capital criteria. Share capital 10 crores. Turnover criteria 100 crores. Loans criteria, then debentures, deposits, outstanding any kind of long-term loans 50 crores. Okay, so point number 1. So write it like this. Section 177. Section 177 applicability to arrow marks down. Left side, listed public company, arrow mark down to all the listed public companies, 177 is applicable. Unlisted, right side, unlisted public company, 3 arrow marks down. 3 arrow marks down. 1 R, 2 R, 3. What is 1? Share capital 10 crores. What is 2? Turnover 100 crores. What is 3? Aggregate loans, outstanding loans, debentures, deposits. Okay, loans from banks, financial institutions. If it exceeds 50 crores. You understand? So the statement is all public limited companies need to have corporate governance. It is incorrect. That's all. Question number 17. Put a star mark. 1 star, 2 star, 3 star, 4 star, 5 star. XYZ Limited is engaged in manufacture of textiles specified under the prescribed rules having a total turnover of 100 crores. Wow, super company. Including export turnover of 88 crores. Hello, hold on. Calculate what is the percentage of exports in the total sales. Sir, we will take one calculator and do 88 divided by 100 into 100 is equal to, sir, 88%, sir. Here round figures are there, but in the exam they can give you 242.8 crores. In that exports are 191.235 crores. Simple. Calculate what is the export turnover in foreign currency divided by total turnover. If it is more than 75%, no cost audit. Do you know that? Or if we read a whole ICA study material, then only we'll come to know all these kind of things, sir. Correct. So here the company has 100 crore turnover. In that 88 crore turnover is export turnover in foreign exchange. In the immediately preceding year, the said company is required to get cost audit conducted for immediately preceding financial year. Answer pado, incorrect. The provisions of cost audit are not applicable in case of companies having revenue from exports in foreign exchange. Exports in foreign exchange. Sir, I exported goods to Nepal and I am receiving rupees, sir. ICA will kiss you with the left shoe. Beta, Sri Lanka, Pakistan, Bangladesh are also other countries. But if you go to that country, don't say, hey bro, I am in foreign country. Seriously. So, export it to another country and bill it in foreign currency. Then it is called proper export. Otherwise, it is called half ticket export. So, full ticket export you need to do, and that to 75% of its total revenue must be in exports. Then you are exempted. Then cost audit is not applicable to you. As the company is having export turnover of 88 crores in total revenue of 100 crores, the provisions of cost audit are not applicable to the said company. Again, I am telling you, what are we reading? Akashvani, Vividha Bharati, Vanijya Prasara Vibhagam. You are listening to radio 92.3425. Okay, Aapki Farmaish. Now, song from Guide, Devanand. So like that, I also have to tell you are listening to CAP classes. My name is Pavan Kumar. I am teaching auditing. This is RTP, May 2021. Very important. So this is an important question. What is the rule? Cost audit is not applicable to a company if 75% or more of your total, revenue is from exports in foreign currency. That's all. Question number 18. The auditor has to report under Section 143 of Companies Act 2013 whether the company has adequate internal controls in place and overall effectiveness of such internal controls. 1 star, 2 star, 3 star, 4 star, 5 star, star. Sir, this is about section 134, sir. Anyway, you will not recollect section, no? So I only have to do Ekapatra Abhinayam. So I will only read question, I will only read answer, I will only give you hint. After that 134, what 134? Then I will tell you what 134 also. Remember, if you read properly, the auditor has to report on the adequacy and operating effectiveness of internal financial controls. Internal financial controls, not all internal controls. Internal controls is a very big umbrella. Many controls will be there which are internal controls. For example, you have a godown. In godown, how to store goods, how to withdraw goods from godown, how to remove goods from godown. Also, there can be so many procedures. Standard operating procedures will be there. Controls will be there. Documents will be there. Security systems. But as an auditor, I am not concerned about the administrative procedures. I am more concerned about the internal financial controls on financial reporting. That means those controls which will affect the financial statements. That I have to verify and report. But here they asked the word internal control. So what is missing, What is missing, from this internal controls they have given, no? If they give internal financial controls, the question is right. Now Chintu will get a doubt. There are two different things, internal financial control and internal control. Now another Chintu will get it. Sir, this internal control is that only, no? We studied in foundation economics. Correct. Beta correct. Zor se lagega. Idiot in audit only. So what is the answer? The given statement is incorrect because auditor has to comment on the adequacy and effectiveness of internal financial controls and not internal controls. Next one, discovery against star mark, section 143, subsection 12. Sir, what is 143? There are certain areas which are complex, okay? For example, if the question involves something about fraud, how many paragraphs will come there, One is 240 will come, standard and auditing, 240, fraud. Caro will come. In Caro, there is something mentioned about fraud. Companies Act will come, section 143, subsection 12. Serious fraud investigation office will come, reporting the fraud to, this management, reporting the fraud to those charged with governance. Reporting the fraud to serious fraud investigation office, reporting the fraud to central government. So in understanding all these things, a student will die. And if it is final, professional ethics also will come. Discovery of an offense of fraud of 100 lakhs, underline 1 crore is the criteria. By audit against a company committed by its officers is to be reported to SFIO. Sir, I know SFI is a student federation. Hello. Serious fraud investigation office. This given statement is incorrect because 100 lakhs fraud, that means 1 crore fraud by the officer on the company shall be reported by the auditor to central government. Fraud of 100 lakhs, that means 1 crore or above, has to be reported to central government. Sir, if it is central government, I have to take a letter and I have to write it to Mr. Narendra Modi, Prime Minister of India. No, you will write to the Ministry of Corporate Affairs, Secretary, MCA. Ministry of Corporate Affairs, Secretary, you will write. Inform ADT 4. Okay, last question. This is also important question. The concept of joint audit has legal foothold under the Companies Act 2013. Joint audit, whether it has any foothold in Companies Act 2013? Yes, because members of company can pass a resolution that always audit shall be performed by joint auditors. So joint auditors has legal sanctity. Joint audit, this concept of joint audit is accepted and it is mentioned in the Companies Act. So the given statement is correct. Under provisions of 139(3), the members of a company may resolve to provide that audit shall be conducted by more than one auditor. This is there in case of many banks. For example, SBI. If you read SBI Act, now student will get it out. Sir, you are one mental fellow. You will read SBI Act. Why will I read SBI Act? Arey, you don't need to write beta. You don't need to read. But I am telling you, if you read in that banking act, it is there that the auditors shall be joint auditors. But that is not a company, no, that is a different story. But here, yes, the concept of joint audit has legal foothold under the Companies Act because section 139(3) provides that the members of the company can pass a resolution that the audit shall be conducted by more than one auditor. That means joint audit. So with this, we have completed RTP, all correct and incorrect statements, and then there are other MCQs and theory based questions. Theory questions are there. With that, we'll come back in another part. So I hope you enjoyed this. Revise RTPs, very important. Still you have just, less than 2 weeks of time to the exam. If you are writing both the groups, if you are writing single group, that means only group 2, you have little more time, but still keep it in mind. Without reading 3 RTPs, don't go to write the exam. RTPs are very important. Okay. I wish you good luck. Thank you.